Are you an investor looking for premium market opportunities? Presenting premium and exclusive service for investors by Kalkine.
According to the Managing Director of the Monetary Authority of Singapore, the global economy faces 4 key uncertainties, including a downturn next year. Ravi Menon was speaking at the SuperReturn Asia Conference in Singapore recently. He outlined 4 significant global economic uncertainties. How bad will the economy be in 2023? Secondly, where will inflation go over the next few years? Third, what effects would geopolitical unrest have on the world economy? And lastly, how might climate concerns impact investor portfolios? So how severe will the economic downturn be in 2023? Due to 2 negative supply shocks and 2 positive demand stimuli, the world economy is experiencing a severe bout of inflation. On the demand side, the releasing of pent-up demand following the reopening of economies has significantly increased overall inflationary pressures, as have the lag effects of the large fiscal and monetary stimulus in response to the epidemic. Global food prices, energy and commodity prices have all increased due to supply interruptions brought on by the pandemic's after effects and the war in Russia and Ukraine. The next concern is where inflation is going in the medium term. After comparing the medium-term inflation outlook to the previous decade's low inflation, it's projected to be higher for longer. Over the past 2 decades, global inflation has averaged 3.8% annually. The next concern is where inflation is going in the medium term. After comparing the medium-term inflation outlook to the previous decade's low inflation, it's projected to be higher for longer. Over the past 2 decades, global inflation has averaged 3.8% annually. And what will inflation look like during the next 10 years after the current high inflation is under control? Well, compared to the last 2 decades, it's reasonable to assume that we will experience more frequent spikes in price increases. This projection is supported by 4 structural factors: supply chain developments, labour market dynamics, energy transition, and climate change consequences. The next worry is how political tensions will affect the global economy. Mr. Menon added that geopolitical tensions would likely result in greater decoupling in the world's economy. The 2 main geopolitical conflicts today, between the US and China and Europe and Russia, are likely to continue for the foreseeable future and contribute to some degree of economic fragmentation. Less cost effectiveness, less technology transfer, less innovation, and eventually less productivity growth will result from weakening globalization. But how might climate risks impact investor portfolios? Well, climate change is arguably the most pervasive danger that global economy faces. The effects of climate hazards on a company's operations, supply chains, and consumer markets lead to the first type of risk: physical risk. De-risking, reshoring, and diversification are 3 adaptation strategies that businesses can use to lessen this impact. Well, that's all for now. Please like, comment, and subscribe, and don't forget to hit the bell icon for future notifications. I'm Rachel for Kalkine Media.